Also welcome on board Swarnendu Bhushan, the co-head of institutional equities, Prabhudas Liradhar, who closely tracks the oil and gas space as well. Swarnendu, thank you so much for making time and speaking with us. Well, there are a lot of rumors and expectations with budget around the corner, right from the excise duty cut to the inclusion of natural gas into GST. What, according to you, is realistic? What is your own realistic expectation from budget this time around?
So it is right that there are a lot of expectations taking rounds, but I believe, uh, see, we just recently had a meeting or a GST meeting in which natural gas was not brought under GST. So I don't think that anytime sooner gas might be coming under GST. What might again come into picture is the earlier trial the government had done of asset monetization schemes that they had prodded the public sector companies to come up with. So that is one area in which you might see some action in the budget. Apart from that, we don't really believe that anything with respect to the sector might be coming in the budget.
Right. Good afternoon. This is Vinny joining in the conversation as well. What I also want to know, and what we actually spoke yesterday, Hardeep Singh Puri was, talked about that $10 billion investment in ENP. Do you see ONGC being a bigger beneficiary than Oil India of the same?
So Oil India, ONGC, both would be beneficiaries. Apart from that, the service providers would also be big beneficiaries because we still import 80 to 85 percentage of our oil consumption, and that situation is unlikely to change. So in light of the high crude oil prices, definitely government might come up with some schemes so that the companies might be investing more. The reason why Oil India has been jumping much sharper than ONGC is primarily because of the volume growth that it has been showing. So April to May data also, if you see, Oil India has given 6% volume growth in oil and almost 9% volume growth in gas production. And it is guiding that it will be raising its crude oil production from 3.4 million ton to 4 plus million ton by FY26, as well as gas production, although it is guiding that it will be raising from 3.2 BCM to 5 plus BCM in FY26. But we have a little bit moderate expectation on the gas front. But nonetheless, over next 2 3 years, you will see that continuously Oil India will be giving you a sharper production growth in both oil and gas compared to ONGC, where we have seen that although they commenced the production from KG 98/2, but we saw that crude oil and gas production both are falling. Even in April and May data, if you see, they have registered 2.5% decline in crude oil production and almost 5% decline in gas production Y on Y.
Yeah, fair enough. But since you're talking about the gas production, talk to me about the city gas distribution space as well. The government is doing a lot to give the impetus to CNG adoption. Who do you think within the CGD space could be the biggest beneficiary of this all?
So we continue to be positive on Gujarat Gas, where the exposure is more on the industrial side. The government is, as you rightly put, that the government is trying to give a impetus to CNG, but the companies that are listed, they have sort of reached maturity in terms of CNG element in their areas. So unless they have new geographical areas, you might not see CNG volume growth coming in them. So, for example, Mahanagar gas is restricted to only 3 4 areas, and they have not they have already matured in areas like Mumbai and Thane. So you will not expect more than say 5% volume growth in CNG. Even if the excise duty cut comes, then also it might not be able to boost the volumes. Similarly, in NCR, we have seen that IGL has been witnessing 2 to 3% volume growth only because the area is mature and we have a new electric vehicle policy, which might have a dampening impact on the CNG. So CNG might not really get a boost even if the excise duty is cut in the listed companies. But yes, in the newer areas, sort of the areas which have come under ninth round, 10th round, 11th round, they definitely will benefit in terms of overall CNG offtake because of the excise cuts.
And also, if you could just highlight in terms of what's your pecking order within the universe, and what's your view, especially coming in on Reliance Jio spin-off reports that are coming out as well.
So on Reliance, we have a hold rating currently, primarily because of the cash cow business will continue to see some issues in terms of poor refining margins and poor petrochemical spreads that we are witnessing currently. You are right that there are a lot of expectations as to what could happen on the, say, demerger or even in new energy for that matter. But in our valuation, we are anyway giving a 15 times EV by EBITDA to Geo, for example, and we don't think that demerger might result in a lot of value unlocking for the stock. Coming back to the top picks in the sector, Oil India has been our top pick since last couple of months. And it has done well, and we expect that since the oil and gas production growth will be very strong for Oil India, so we expect that momentum to continue for some more time to come. And another stock that the investors could look is Gujarat Gas. Although in the monsoon, we don't expect that the stock price might go positively from here, because in monsoon construction activities are dull, and we also see that there is some flooding happening at Morbi. But otherwise, after monsoon, there will be again pickup in the construction activities, and we will see that industrial offtake for Gujarat Gas will improve. So from that perspective, Oil India and Gujarat Gas are the two top picks in the sector.
Okay, Swarnendu, thanks so much for making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.